So WeWork, the company that was founded by Adam Neumann a while back, probably in the mid 20 teens, and then went through basically a whole thing where they tried to IPO, and basically the company wasn't worth very much, and so Neumann ends up getting forced out because he also tried to, I think, trademark the word "we," if I remember correctly, and then sell it back to the company, and then also own some of the buildings individually and was leasing them back to the company, so it was a very messy situation. They since moved on from Neumann as the head there, but they've got a whole bunch of debt. They still have a bunch of leases that are, outstanding as well, and their cash flow just isn't strong enough to, cover all of that necessarily, and so they've just continued to burn through money left and right here. They have $500 million left in undrawn debt commitments from SoftBank. They're expecting to end the year with $300 million in cash, less than a third of what they had at the end of last year. And so the question is, hey, can they salvage this, or is this company going to have to declare bankruptcy at some point in the next year or two? And what's really interesting to me about this, Mark, is it would seem to me in the environment that we're in now, where there's this very pronounced push towards hybrid and remote work in a lot of cases.
Yep.
This should be a perfect setup for the WeWork business model, and they still can't make it work because they're just carrying so much debt.
Yeah, you made a couple of the key points, Chuck. The biggest one that sticks out to me is their cash and short-term assets, cash equivalents and stuff like that being down two-thirds over the past just year and a half or so. Stock price down 75%. I'm not obviously I don't want to make light of anybody's misfortune, but it's down by jaw-dropping amounts. I'm looking at their website. They're offering a free 5 days of workspace if you agree to take a tour. I don't know how recent that promotion is, and I don't know if it's fair to say it smacks of desperation, but in light of the context set by this article, it seems to. What's going to happen to the way we work and live for this company to turn things around? Is it a matter of a better business plan or better marketing, or does the culture need to shift? And how realistic is that?
It's unfortunately in real estate, it often seems to me that if you are buying up or signing leases just at the wrong time, you're ultimately competing against companies that did not do the same thing. And so if you're carrying all of that legacy debt or legacy leases at those higher rates, it's just too hard to compete. And it feels like that's what's going on. And it's coupled with the fact that with WeWork, it does seem like a lot of their business is dealing with tech companies and startups. And this is just a horrible time for tech companies and startups in space.
Yep.
And so, as much as we hear about tech companies cutting headcount, Facebook last week announced that they were abandoning, I think it was 500,000 square feet in Hudson Yards in New York City that they're going to try to sublet instead. And so we pay attention to the headcount a lot because it's front and center. Mm-hmm. But there are plenty of companies out there that are saying, look, we're going to cut 15% of our headcount, and we're going to try to reduce our footprint for office space by 30% as well. And that piece is just not being picked up, and I think WeWork, unfortunately, gets hit by a lot of that too.